Time to bring in Kate Moody with the business. Great to see you, Kate. The Trump administration trying to calm oil markets and lower prices as it continues to wage war in Iran.
Yeah, two major announcements, Mark, coming out of Washington this Wednesday as those petrol prices continue to rise. In addition to last week's decision to release some oil from its strategic reserves, the Trump administration is now trying to boost global supplies by easing sanctions on Venezuela. The Treasury Department saying it would authorize U.S. companies to do business with Venezuela's state-owned oil company and its subsidiaries. The temporary move is intended to, quote, support the global energy market by increasing the supply of available oil. All payments will have to go through a U.S.-controlled account. Separately, the U.S. president has issued a temporary waiver of the 1920 Jones Act, which requires that goods being shipped between U.S. ports be transported on vessels that are made in America and owned by American companies. It means that for the next 60 days, foreign-flagged ships could transport cargo, including oil, natural gas, fertilizer, and coal, between U.S. ports. A statement from the White House spokeswoman saying the administration, quote, remains committed to strengthening our critical supply chains. Now, analysts say these moves are unlikely to have a significant impact on global oil prices. The national average for a gallon of gasoline in the U.S. is now $3.84. Before the war, it was below $3. U.S. Vice President J.D. Vance saying this Wednesday, that more measures to lower gas prices would be announced in the coming days. Take a listen.
Gas prices are up, and we know they're up, and we know that people are hurting because of it, and we're doing everything that we can to ensure that they stay lower. I will say, the president said this, and I certainly agree with it. This is a temporary blip.
Meanwhile, Iraq has resumed oil exports through Turkey using a pipeline that avoids the Strait of Hormuz. Iraq's state news agency reporting new contracts with international carriers and buyers to export crude oil through Turkey, Jordan, and Syria. Well, these moves haven't been enough to calm global oil markets as energy infrastructure in the Middle East continues to be targeted. US WTI up over 2% this hour. The international benchmark Brent crude topping $109 per barrel earlier in the session, just over $108 this hour. Iran has warned it could target oil and gas facilities across Saudi Arabia, the United Arab Emirates, and Qatar in the coming hours. Some of those companies have reportedly now evacuated their facilities. The threat comes in response to an attack on the South Pars natural gas field in Iran. The International Atomic Energy Agency, meanwhile, has also confirmed that a structure near Iran's Bushehr nuclear power plant reactor has been destroyed. Well, those high oil prices have weighed on global stock markets. The major European indices closed lower, down nearly 1 percentage point in both London and Frankfurt. Wall Street's in the red as well. Investors will be watching the U.S. Federal Reserve policy meeting later this session. The central bank unlikely to touch interest rates, but it will be under pressure after new data showed higher than expected producer price inflation. Wholesale prices rose 0.7% in February. That indicates that inflation was already heating up before the Iran war and those higher energy costs. The UN's shipping agency is considering a proposal that would allow safe passage for some 20,000 sea workers whose ships are stranded in the Gulf. About 100 ships used to pass through the Strait of Hormuz every day. Industry tracking data show just a handful of tankers have gone through since the conflict began, suggesting that Iran is allowing select vessels to navigate the waters. Yuka Royer has more.
The Jagdlatki arrives in port, the third Indian tanker to reach home this week after sailing through the Strait of Hormuz. Although it did have a close call on Saturday as the UAE's Fujairah terminal came under fire when it was loading oil there, it's one of a lucky few. As Iran continues to threaten commercial vessels and target civilian infrastructure in surrounding Gulf countries, around 3,200 ships remain anchored in the area, with some 20,000 seafarers stranded, according to the International Maritime Organization. 7 commercial mariners have been killed.
If they're working on board tankers, they're surrounded by oil and gas. And some of them are being targeted by missiles. So it isn't a great place to be right now for a seafarer, and there's nothing much they can do about it, and they're not trained to deal with warfare.
Calling the current situation unacceptable and unsustainable, the IMO's Secretary General urged practical measures to protect merchant ships as the UN agency kicked off an emergency meeting. But the talks got bogged down in formalities as some members, like Iran, argued against fast-tracking procedures.
The views of the Maritime Safety Committee should, in our view, be obtained before the Council proceeds further.
The IMO's 40-member council could vote on Thursday on several proposed resolutions, including one to establish a safe maritime corridor to evacuate seafarers. Even if passed, resolutions will remain non-binding.
Middle Eastern tourist hotspots like Dubai are now seeing waves of cancellations as Western governments urge their citizens to avoid the region. It's driving holiday makers to make new plans, with European destinations like Spain and Portugal seeing surges in demand. But travelers will be facing higher prices and fewer flights as airlines cut routes and hike their fares over the soaring price of jet fuel. Cami Corcoran has the story.
Spanish seaside towns, such as this one, might soon be experiencing an additional influx of visitors as tourists look to swap Middle Eastern destinations for European ones. Concerns about the ongoing conflict in the Middle East have triggered a wave of flight cancellations to Gulf destinations such as Dubai, Oman and Qatar.
The main effects we've seen are cancellations, obviously, and a change of destination. Normally, people really like traveling to the Asia region, but since they usually have to stop over most of the time in the Emirates area, they're choosing another route or other destinations, whether national, on the American continent, or in Europe.
Bookings to Portugal and the Balearic Islands have surged by around 40% in recent weeks, according to travel agency Thomas Cook. The shift has been welcomed by hospitality workers in the region.
Since there is a war, people aren't going to leave Spain, they aren't going to leave Europe. And tourists who were going to travel further away but want a bit of sun will come to the whole Mediterranean coast.
But more broadly, the aviation industry finds itself in turmoil. Both Delta and American Airlines are expecting additional costs of $400 million. Fuel prices have doubled in Europe, while in Asia they are up by almost 80%. The Delta Airlines CEO said the industry was moving to pass on higher expenses through price hikes, meaning travellers can expect more expensive airfares in the near future.
Mark, higher energy prices really impacting all areas of the global economy.